back. We are officially live. Another episode of Macro Mondays coming at you live on a Tuesday. Dom, I appreciate you being flexible. I was traveling yesterday, but I am so excited to have this stream. It's been 2 weeks since we've done these streams, and I feel like I haven't had any idea where the market's going because I haven't had you on here, Dom. Market is rugging, and you just started the stream. And you said you called it.
Always do. See, you say you've had no idea where the market's going, but I think you could have probably taken a guess at which way I would have said. But then again, I've been sharing a lot on Twitter liquidation charts of where people are setting their stop losses, and that is pretty much where the market goes. And at the moment,
yes,
it's down. 21.5 is the short-term target for me.
21.5 is the short-term target. And we're going to pull up all these charts in a while. I'm excited to see where you think it's going today, guys. Welcome everybody to the stream, guys. If you haven't yet, make sure to smash that like button. We got Shug Alexander, My Ultra Journey's here. May you be well. Bree is in the house. How you doing, Bree? Scottish Crypto, what's up? Life Changers here as well. Scottish Crypto says, give us some hope. Doom King, are we going to have any hope today, Dom?
Unfortunately not. No hopium here.
Which is a good, guys, this is, and like, look, it's part of the game. What I always say is I would rather have someone that is calling for lower times and is correct than is calling for, hey, I'd rather have Dom on here saying we're going to go lower and be correct than have someone on here saying 30K is happening and you're putting your money in, right? You think it's going to go up and then you get wrecked, right? What's B-Root saying now? Is he still saying?
Oh, yeah, you can imagine. He's still proving me right. I'm still counter trading him. And anything that's not meme coins, I'll counter trade Brutes all day long.
I love that.
Bitcoin, I'll short when he buys and I'll buy when he shorts. But he's good at what he does on the low cap space, but you can't mess with the Doom King on Bitcoin and macro. No, the
Doom King. No, you can't. And we have a lot of charts to pull up, guys. If you haven't yet, like I said, hit that thumbs up. Already 40 people joining us here today. We took a 2-week hiatus as Dom was on his honeymoon. Congratulations, I guess, on the honeymoon. How was it? Was it nice?
Incredible. Maldives is amazing. You been?
Never. Where is the Maldives?
So Maldives is Indian Ocean. So you got India, Sri Lanka, and then underneath that. And it's like incredible. Just clearest water in the world. Swimming with turtles.
Sounds really nice. Turtles, just like these old creatures, just so chill. Better than swimming with sharks, not too relaxing. Were you able to unplug at all? Because I know you're constantly working, you're running token, you're running VEMP, like you're always on. Were you able to unplug and relax, or were you kind of working the whole time?
I actually did, to be honest. My team said that they were surprised at how much I didn't work. But my wife obviously wasn't in agreement that my lack of work was quite so impressive. But I mean, I just I took the time to chill out. Like, the thing is, like, you've got in the Maldives, so because it's tons and tons and tons of like tiny, like basically like it's a country full of desert islands. So the whole island you're on is the resort, and the capital city pretty much houses all of the locals who pretty much work in all of these resorts. So you fly into the main, and then we got a seaplane to our actual resort. And then once you're there, like, there's tons of stuff to do at the resort in terms of like snorkeling and like swimming. Like, you can swim with like whale sharks, turtles and shit, and just general like snorkeling. And like you've got pool, and then your actual villa is on like stilts, and you can walk down into the sea. So it's proper like sort of movie style desert island, but there's not too much to do. Like, it's not a sightseeing place, it's literally like a switch off. But if you're sunbathing all day, and I got my phone up, so there'll be a bit of odd telegram here and there.
I figured, yeah. And honestly, when you're and shout out to our guy Mike the Investor, when you're on a honeymoon, your wife probably wants you to do zero work, but obviously it's like, dude, I think we're like we're kind of addicted to work. It's like you need to be on there, Dom. You need to be tweeting your charts to Twitter. It feels good, and you obviously need to be updated with the Telegram. There's a lot of big news, guys, today in the crypto space, especially when it comes to Colt DAO. First off, they kind of rolled out their blockchain. We're going to talk about that. Vitalik Buterin, who received a large portion of tokens. He sold a lot of his tokens, Colt DAO being one of them. We're going to be looking at the macroeconomics of the charts, the crypto market. I want to talk about Hex and Richard Hart a little bit as well. But let's go ahead and just take a look at the global cryptocurrency prices today. The global market cap is at 1.02 trillion. I think our recent all-time high in the past month was around a $1.1 trillion market cap. Bitcoin at 22.25, ETH at 1,500, BNB at 287, XRP at 37 cents, Cardano at 32 cents, Polygon finally dipping below $1.20 at $1.13, Solana holding $20, Polkadot slipped below $6 Dom at 583, and Shiba Inu, wow, fell below a $6 billion market cap today. Doom King, explain to us what's happening. And you just said that you predict that we're going to be seeing a 21.5K Bitcoin. What's your timeline on that? Is that today? Is that this week?
I mean, it's in terms of if you pull up my Twitter, I posted the up-to-date liquidation chart. So effectively, you've got a huge amount of so that's a 7-day liquidation chart. So what you've got there, I am actually in BXB. That is true.
And thank you, T-Bone, for the donations. I appreciate you.
Not sure who T-Bone is, but that is accurate. But as you can see by the strong yellow underneath, well, you can see that the strongest liquidation area is above all-time high, well, above local top. So that's like 25.5 to 26. So that's the yellows that you see there.
And real quick, just if you could, I know a lot of people are listening now, a lot of people are listening later. Can you just explain what a liquidation area is?
So when you long or short the market, you place a stop loss. So in order, well, if you're sensible with your downside and risk, then you place a stop loss. So that if it goes below a certain level, because you got like technical analysis where like if it drops below a certain trend line, then it will probably drop lower. So you set a stop loss where you think that your trade is invalidated. And usually retail is wrong and people are wrong. Like you can pretty much guess that if the crowd is in one bet, it will go the other way. So this basically shows you where people are setting their stop loss. So as you can see by the yellow lines, this is the liquidation areas, which means that if it hits this level, it will liquidate their position. And so this is basically why you had the massive pump before.
Right here.
Is that you were sitting at like, we were like between like 16 and like 16 to 18K for so long that everybody was placing their stops like above that channel. And so you had so many liquidations that you could cause by pumping the market up. And that's what caused this violent move to the upside, because you have what's called like a cascading stop losses. So you can see by the liquidation map that it's really, really thick underneath where the current Bitcoin price is. So you can see that where it's chopped down below, where it's navy blue or light blue, that means there isn't much liquidation there. And that's because it just took out those areas. So it's already stopped out that area. So now if people want to bid the market higher, they have to do so by spot, because there's no short. So with shorting, you are selling. So where you have a stop loss hit on a short, it buys back the position you sold, which then means that if you have all of these cascading liquidations of shorts, they're forced to buy back at market. And that propels the price higher because everyone's getting liquidated. Everyone's stop losses hit, their sell turns into a buy. And that's why you have this big old move up. But as you can see, the same is on the downside. And you can see that the yellow is, although it's much brighter above all-time highs at 25.5 to 26, since there's no liquidation cascade to help it up there, it has to be bid with a lot more volume and a lot more organic buys, which just isn't really there at the moment. So the liquidations are why it moves violently up. So you won't have a move violently up from here all the way to 26 because it's got to be done organically. So eventually, if it hangs around here for too long, people will short tons and it will get yellower and yellower, and then perhaps then you could move up. But it's too big a gap. But you can see on the downside, if you're a market maker, all you've got to do is get some sell pressure. And if you can dip that sell pressure down to like below 22, you can see that it will start that liquidation cascade where they get liquidated. The buyers in this, because it's below, the buyers have their stop losses. And when the buyers get stopped out, they're forced to sell. And so the sells hit into the other sells and into the other sells, and it just cascades down. So that's what you can tell by looking at these charts, is that it's like a magnet, these like liquidations, because market makers know that they can force positions with as little effort as possible, because if they want to force it higher, they've got to do all the work. If they want to force it lower, they've got to do some of the work, and then the stop losses do it for them. And that's why Max Payne is on the downside now, because they've made it easy for market makers. If you're a market maker right now, you know full well that if you can push the price down by 500 points, you can probably get it down by 1,500 points. But on the upside, you've got to push it up by 2,000 points to get it up by 500 points back at 25.5.
So real quick, and thank you for explaining that, because there are some people in here that are newer, or it's refreshing to hear it again. So how accurate is this chart, and where exactly, like, how does High Block Capital pull all this information? Are they pulling it from every single exchange? Are there just some exchanges? Like, how do they pull this? And also, how accurate is this?
So, I mean, I won't speak for its like 100% accuracy, because it depends on the market really, because you will have occasional like black swans where fundamental news or headlines come out that will dictate the market movement. So that does happen sometimes. But if there isn't any news, this is really, really accurate. You can take a look, and if you scroll down, go onto my Twitter at Dominic VEMP, click on my media, and you can see when I've posted this stuff. And I tend to follow it up quite quickly. And it's been accurate. If people have been following me for a while, there's me.
Be roots.
But you can follow, and it's tended to perform quite at expectation, to be honest. But
your brain works so crazy, because like for me, and I don't know if other people in chat, it's like when I see these charts, it's like I just see a bunch of like lines, and like this makes sense to you, and like you're able to look at this information and like make.
That's one that's worked out perfectly, to be honest.
Let's go back to it. What is this?
If you click on that. So this is what a type of technical analysis called Bollinger Bands. So I'm not a big fan of these usually, but what I found so interesting is that you can see on this. So this is a daily chart. So it's pretty long term. This is 12 months for, this is a Russell 2000, the small cap index, S&P 500, US 30 is the Dow, US NASDAQ, obviously the tech index. You can see all of those are at the midpoint of the Bollinger Band. So it tends to reverse at the bottom of the blue line, and it hits the mid. It can either push above that, which is a good indication it goes to the top, or it falls back down. But if you scroll, there should be two pictures on that post. So you can see them. Yeah. So this is the European Bollinger Bands. So you've got the Euro Stoxx 50, the DAX, the FTSE MIB, and the CAC 40, which is a French index. And you can see all of these yesterday were at the top of the Bollinger Band. So you had all of the US at the middle, and you had all of the EU at the top. Now, this is the prices. That's the prices yesterday. So if I share my screen, I can show you what I've got open.
Yeah, share that up. And guys, we have 65 people here, 28 likes, guys. If you are enjoying the show, just hit that thumbs up, help spread this around with more people on YouTube, get more people in here for some macroeconomic news with the VEMP CEO, Dominic Ryder. Let's hit that like button. Let's get up to 50 likes here on the stream. Dom, this is your chart. I'm going to go ahead and pull it up. Look at Dom. He's got like 9 computer screens he's looking at over there. He's dialed in now.
Only 4 at the moment.
4 is a lot.
It is.
Let me know when you're ready, and I'll pull it up.
Yeah, no, it's all ready. I can work at the same time. But you can see, like, so if you look at the prices of where we are now compared to yesterday, you can see that we've had pullbacks on all of them. So I'm not sure of the levels on but you can shout them out. So where was the Italy 40 on the picture on my Twitter?
Italy 40, the red was at 27,928. Blue was 27,015.
27,928, yeah. So 150-point pullback from there. At the DAX, the German first 40.
The German 40, the green was 15,663. The blue was 15,248.
So again, like 80 points in that. So you can see that it's, if you zoom in a lot here onto like, you can see that it's hit the top of the Bollinger Band and it's pulled straight back. And this is on the Italy 40. So if we then move that and look at the S&P and go to the same daily chart.
And guys, if you're in there and this sounds like hieroglyphics to you, don't worry, it does to me too. Like Dom is his brain works differently than a lot of people, so don't worry if you're like, what the hell? Because
that's the S&P 500 again, yeah. Because it's a US. All the USs were at the midpoint, and you can see hit the midpoint, back down again. So I don't usually use Bollinger Bands; they're not my favorite. But I noticed it when I was just playing around with some charts. I noticed it on the German 40s, the DAX, German 30. And then I thought, okay, I'll look at some others and see if it's there. And then I noticed, like, literally all of the US was at the midpoint, all of the EU was at the top point. Obviously, these are pivot points, like they're indicators of pullbacks and when it will go. So using that, I thought, well, it's probably fairly likely that, you know, we're probably set for a pullback. And so I can't remember what I said in my tweet. I think I said it's one of those where people will say it's too obvious. Which happens a lot, because if something, like I mentioned before, and the reason why you target liquidation levels, if something is obvious, it means that people are doing it,
yes.
And people are usually wrong. But sometimes, because everybody now knows that, reverse psychology works. So it's too obvious that people don't think it will happen. And because people don't think it will happen because it's too obvious, it does happen.
What is your what you're saying about I love your saying the markets will stay irrational longer than you will?
Markets can stay irrational longer than you can stay solvent.
Yes.
And that is true.
That's a powerful saying.
It's true though, like as in and I mentioned it before, like you can see here, this was like a perfect trend line. And it worked for so long. And it broke above. So you can see, like, literally this trend line was from all-time high back to here. So this is the first time it tested this trend. It dropped all the way back down, then touched it here. And here, everybody was saying it was too obvious. It won't pull back. And then it did. And then it hit it again. Again, everyone was saying that's too obvious. You know, it won't do it a fourth time. And it did. And then on the fifth time, obviously, when everyone thinks that this channel is absolute God, it breaks it. But again, it then pulls back here to the 200-day moving average and literally bounces back up. So once we drop back down into this channel, like, it's over. Like, we will go back to the lows. You've got the 50-day moving average, which we touched today. So I've put some hedges on here, basically, because these moving averages are another pivot point. Then you've got the 200-day and the 100-day. So this is what's called a death cross. And you have, which actually, have I got my charts on the right way? Oh, hang on. I was mistaking the Bollinger Band bottom for a different one. A death cross is usually where one of the moving averages, a shorter term one, goes beneath a longer term one. Is an indication that we're probably going down. But I was looking at the Bollinger Band there.
No worries, no worries. So where, let's just say, and guys, these are just predictions from Dom. You know, sometimes he's right, sometimes he's off. It's really hard to predict this stuff, and I see people in the chat are absolutely loving this stream, guys. Make sure to hit the thumbs up if you are enjoying it as well. Where can we expect to go short term? Where do you? I mean, you said 21.5. You know, obviously we have the news from Jerome Powell that just came out. He made a tweet saying, or he said that inflation is likely going to get higher, which I think you actually like because you want him to crush the markets, not give us any hope. So, I mean, what can we expect? You just, you know, it's March 7th. Maybe this week into this month, where can we expect this thing to go?
It's hard. I mean, the markets right now are extremely irrational. I mean, the bond market, well, there's a saying in finance, which is that the bond traders are the smartest in the room. And that's true because equity traders like moon boys, like just buying stuff, And right now you have this huge surge in one day dated options. So options are basically leveraged bets on which way the market will go. So this is in the stock market, I should add. So people are betting that by the end of the day, the S&P 500 will be above X level or below X level. And so since these are leveraged options, everyone is like speculating with like 20x or like 100x like the money that they actually put down. And so because this has been opened up to retail like never before, the volumes that are coming in, this causes real like asset managers like Citadel to hedge the downside or hedge the upside. So they buy and sell stocks in the real market to hedge against the deal flow and the order flow put on by the options market. And this is what's been leading to like an absolute crush in volatility. So bear in mind, and I can show you, I can show you this again, like anyone who knows, and I'll, pull it up. Let me get the VIX up here for April. So the VIX is known colloquially as the fear index.
What was that word? I don't know if I've ever heard that word.
Colloquially. So if it's colloquial, it's like regional, it means. So it's play on the lingo. But yeah, so the VIX is a measure of fear. The VIX rises when stocks drop. It used to be the case that is what happened, but that hasn't been happening. If we look at the 7-day chart here, right, you've got 7 days of the VIX, and you've got let's go on to a 7-day chart as well with the US dollar here. Now the US dollar is inverse to stocks and to the market in general. So both of these, right? So when the dollar rallies, stocks do badly because the dollar is a flight to safety. When stocks do badly, the VIX is supposed to rally because it's a measure of volatility. Therefore, if stocks drop, that is volatility. Therefore, the VIX goes higher. The VIX isn't moving whatsoever, even though if you look on 30 seconds and go back to a week, let's get rid of the Bollinger Bands, you can see that particularly in the past 2 days here, let's get this down to 2 days. So you can see that we've had a big move to the downside, like over 2% move to the downside in stocks. And that hasn't spilled over at all to any type of fear, even though people are, more bearish than they were because the bond market is, the 2-year treasury yield is almost at 5%. And like at one point the other day, every single yield, 10-year, 30-year, and 2-year was above 4%, which won't mean much to people, but that's like, it's never been seen before. And when stuff has never been seen before, it's usually not a bullish sign. In fact, the last time we saw those treasury yields was 2007, and we all know what happened then. And the time before that we last saw those sort of treasury yields was year 2000, just before the dot-com crash. So the bond market, the smartest traders in the room, is screaming that there is something wrong. But the reason why the fear index doesn't give a shit is that the VIX is a measure of 1 month forward volatility, and nobody is trading more than like a day at the moment, because you've got all of retail trading these 1-day expiring options, and it doesn't carry over to the VIX because the VIX, the fear index. So the VIX is acting like, I think at one point it got to like levels not seen since like 2014, the VVIX anyway. And that's madness. Like, it just is broken in the current market, because you've got all of these leverage trades, which means that, well, what people are forgetting is that we've been, if we look on the S&P and then we look at the trend over the past, like, so where are we here? So we hit, well, here's 3,800. If we go even further back, we got to like 3,600 here. So we have been, if we draw a price channel, there's 20% rally, peak to trough. And like that is officially, if you rally from bottom to top over 20%, then that means you are officially in a bull market. So we almost were officially in a bull market, but we didn't quite get there before we pulled back again. But you've got to think that this is like a drop of 4-5%, and like the VIX like hasn't even moved, and that just isn't what usually happens. And people have been betting so much with these options, and the options have amplified all moves. But we have been on an uptrend since, when was this? What, October? So coming up to almost 6 months of uptrend, where we've been having these insane call volumes, and the market's been going up dramatically. It works the same on the way down. And this is what Jamie Dimon, the CEO of JP Morgan, and also other people that I've been watching on Bloomberg have spoken about, is that the Fed is not very good at responding to problems before they've actually like broken something. So they're very unlikely to do anything or rein in this rampant like one-day speculation until something bad happens. Because at the moment, no one complains when you have a 4% upside move, do they? Like, everybody loves it when everything's pumping.
I love it, Dom. I'm the guy tweeting, "Let's go!" I love it.
Like that's why they don't do anything about it until something goes badly wrong. Because even though it's the one-day options and the leverage which is causing those outsized moves to the upside, nobody complains about that. But it works the way around. And if we have a big market shock, we will see a circuit breaker. And that's one thing that we get to see since COVID. Look, we had this in 2018, and it's known as Volmageddon, Volmageddon, VOL. So Volmageddon was in 2018, where this same thing was happening, and people were crushing the volatility index, the VIX, and it unwound like dramatically, and it completely obliterated so many like people who are speculating and crushing the market. And right now, the people crushing the volatility is retail. So it could really screw a lot of people, but they won't do anything about it until it does. And then they'll like backdate it. But yeah, I'd be very careful buying, picking up pennies in front of a steamroller if you're buying like anywhere around here now.
100%. And My Ultra Journey said, Dom needs to offer a trading class. Imagine the traders coming out of his school. World takeover. He said, good night. And it's 9 a.m. here. He works the night shift. So he's crashing. He says, love this stuff. Thank you, Jake and Dom, for all your hard work. Of course, I'm enjoying this show as well. There's so much to cover here, guys. If you haven't yet, we have 95 people in here. Thank you guys for joining us. 44 likes. Let's get up to 60 likes, guys. If you haven't yet, smash that like button and let's get up to it. Dom, I want to shift now to the Jerome Powell meeting that just happened. He said today that the Fed, excuse me, that's still your chart here. Let me go and pull up my, he said, let me pull up my screen here. He says, Jerome Powell says that he warns, Fed Chair Jerome Powell warns interest rates are likely to rise higher than previously expected. Before, Dom, you said he needs to crush the market. Absolutely. That's the only way. It was a couple streams ago, guys. Dom said he needs to come out and crush the markets, and we could potentially have a bull run here in 2023. He did not. He raised the basis points by 25%. You called this perfectly. You said if he raises it by 25%, we're going to have a short-term pump, and then we will see a major crash. You said if he raises it by 50 points, we'll have a short-term crash, and then we will see the markets recover. How do we feel about this? He's now coming out and saying that interest rates are likely to rise higher. Is this bullish news long-term? How do you feel about this statement?
So I think I tweeted out when it actually happened, like the whole reason the reason he's had to come out and say this stuff is because, like an absolute clown, he celebrated too early. Like every single time he has spoken, the past 2 times, he has mentioned the word disinflation more times than he ever has. He has said the process of disinflation is here, and he was so dovish. Dovish means bullish compared to hawkish, which is bearish when it's interest rates. And he was basically doing a victory lap, saying, "Oh, we've done it," and so markets were pumping. And I think I tweeted about like he will go down in history as like the worst Fed chair, because he was saying for ages inflation is transitory. It wasn't. So they started raising interest rates way too late. And now, like an idiot, he celebrated too early. And I was tweeting for ages about the increase in commodities. Copper was up 20%. Gasoline was up 20%. All of the things which influence inflation were pumping. It was the most obvious thing ever for anyone to see. And funnily enough, it spilled over, because if you make the markets bullish, the dollar weakens. And when the dollar weakens, commodity prices go up, which is why today you've got gold down, you've got silver down, palladium down, and you've got the dollar absolutely skyrocketing, because it's inverse to stocks. So this is the thing. Like he celebrated and did a victory lap way too early. Financial conditions loosened, which is the opposite of what you want if you're trying to tighten them. And funnily enough, like was glaringly obvious, when the financial conditions loosen, the dollar weakens, commodities go up. When commodities go up, inflation goes up, and inflation is back. And it's not going away either, because now you have China reopening, you have demand back for commodities. Like China represents 60% of the demand for stuff like copper and like palladium and lead.
Supply or demand?
Demand.
They demand 60%.
Yes, and they have huge. They're a huge importer of energy, and energy is like 60% of CPI. And you're also not seeing a reduction in the prices of homes. In fact, even like house prices, which is the other core element. Core CPI basically is shelter. Well, core CPI, everything that isn't food and energy. So core CPI is stuff like, shelter, insurance, anything that's not energy or food basically is core CPI. And that's at levels in Europe, all-time highs, never been seen before, the levels of European CPI, core CPI. And again, massive increases last month after they took this victory lap mentioning disinflation as many times as he ever has. And they celebrated too early. And again, now disinflation was transitory, funnily enough, and it's back. And the thing is, gasoline, if you look, it's like up again. I think over 20% or 25% on a 30-day period, and that spills over, and it will continue to. And that's why I said months ago, and I say to this day, he needs to crush the market, because he keeps on. He's a people pleaser, and he keeps on playing up to these people. And he keeps on saying, like, disinflation has started. We've seen some elements, but there's a long way to go. And the market ignores him, and it kept rallying, and he kept doing it, and he kept doing it. And it's back because he doesn't have the bollocks. There's a guy, so Paul Volcker.
And real quick, I feel like today's message show was a little bit more hawkish, if you will, right? A little bit more hawkish. Just because I'll pull up just a few of the tweets. I mean, like, I know you want him to crush the market, but like he says, hey, Jerome Powell says inflation progress is likely going to be bumpy. He also said that there's many unusual factors affecting inflation and not sure how it's going to play out. So it's a little bit more hawkish than he was in previous weeks where he was using words like disinflation, right? Like he's at least getting a little bit more bearish, if you will.
But this is the thing, like, the whole reason why he's had to backtrack and start doing this is because he lost control in the first place.
The victory laps. Yeah.
Yeah. He was hawkish. He was dovish when he should have been hawkish. And now, whereas he could have been actually celebrating now, because if he continued and stayed the course like he was supposed to, but he didn't. And that's why I said they need to do 50, because otherwise they'll lose control. And they did.
Did they raise it at all today or this month?
No. So he's basically, today is the reporting to like the Senate. He's currently talking to the Senate about, interest rates, about the economy. And tomorrow he's also speaking, and he's speaking to the House.
Okay.
So this wasn't any sort of announcement or anything like that's still to come. But the problem is, and it's why I said at the last one, he needs to do 50. He did 25 at the last one. That's a step down. Now, it is very, very difficult to step back up, because up until today, the markets were pricing in a 70% probability of 25 basis points and a 30% probability of 50 basis points at the next meeting. That's now flipped, that they're now pricing 50, which is why the stocks have dropped. But the reason why is because it's so much harder to step back up after you've already stepped down. If you have to step back up, it is basically them saying, we were wrong. And it's hard for them to do that because a central bank runs on credibility.
But it feels like they're going to step back up. Like if you just like if you look at his quotes today, it feels like they're going to go 50, at least 50. I mean, is there a chance that they go 75 basis points?
Only if CPI again. So you've got another CPI print before this next meeting. If that comes in hot again, you've also got non-farm payroll on Friday, which is the jobs report basically. And if that came in super hot last month, if that comes in hot again and CPI comes in hot again, then yeah, they will have to. I mean, if they don't do 50 this time, like again, I said it last time, but I'll say it again. If they don't do 50 this time, they'll lose control. They lost control already. And if they don't do it this time, like they will absolutely lose it. Like this is the thing, because they always change the definition of inflation. Like when Paul Volcker, like I mentioned, Paul Volcker, so he was a central bank president who came in when inflation was rampant last time in the 80s. And so the central bank president in the 70s, they had inflation then. And the central bank president then cut interest rates too quickly, pivoted too early, and it came roaring back in the 80s, like worse than ever, exactly what the mistake they're making now. And Paul Volcker is famous for the Volcker period because he had to raise interest rates to over 20% to curb inflation. So they're where are they now? Like 4 to 5%. I think 4.7 to 5. Yeah. So Paul Volcker had to raise them to 20 to curb inflation and fix the problem. The thing is, the definition of inflation has changed now. In fact, this person just said, how does Dom think this affects Jay Powell's decision making? He said today in the Senate Banking Committee, somebody asked him this question about what consideration does he give to the US debt? And he said, absolutely zero. And the reason why is that's fiscal spending. And the Fed's mandate is monetary policy. Monetary and fiscal are completely different and completely separate. If the Fed starts meddling in fiscal, then they're no longer independent. And this is what he said today. He takes no consideration into that. And he can't, because then they won't be independent. And he said that they have to be. But yeah, like I was mentioning before, because they changed the definition of inflation now, if they measured it by the same measurement they used when Volcker was hiking, it would be at the same rate that he had to raise it to 20%. And then we're dumb enough to think that 4.75 is going to do it. It didn't back then. The only change is how we measure inflation. If we had the same measurement, we would have the same inflation as he did back then. And funnily enough, he had to raise it to 20%, but we think 4.75 will do it this time. Wow. This time is different. It's never different. Every time is the same. And we're doomed to repeat the same mistakes if he doesn't get a grip and raise 50 basis points. You need to crush the market. That's the only way that the dollar rises, and that means that commodities tank.
Yeah.
It wasn't Russia that caused inflation. It was fiscal and monetary spending. The Fed printed tons of money, and the government with fiscal spending basically gave everyone a free airdrop. And funnily enough, Everybody
Literally.
spends free money. So yeah, like I said last month, they need to crush the market, because if they don't, it will come back. And I mean, yeah, 50 basis points they should do no matter what, even if there's a temporary blip, and inflation like comes down slightly from last month, they should still do 50. It's better to over tighten, because you know full well that you can print your way out of it.
Yeah.
But if you under tighten and inflation goes up to like 20%, like if that gets into people's heads that inflation isn't anchored anymore, and that inflation will get out of control, it's a self-fulfilling prophecy. And that's the problem, is that it's as much psychology as it is economics. If he doesn't get into people's heads expectations, because again, that's why we see the rallies, because everybody front runs the pivot. Everyone thinks, oh, he's going to pivot, he's going to slow down, therefore we're going to buy stocks, loosens financial conditions, and they get ahead of him. He needs to shock the market, because right now the market is getting ahead of itself, and it's causing these problems.
Dude, I love this show so much. Seriously. I'm so glad you're only going to get married once, so you don't have to leave again for another honeymoon. Please don't ever get a divorce and get married again, because like I miss this show, because it's like, a lot of the shows I have are with friends and we talk about like certain, meme coins and other tokens, but it's like there's so much value in this show, which is very, very important. Now, there's so much other stuff I want to talk about, including Colt DAO, the blockchain, but I want to ask one more question on this. So first off, when is that meeting that he decides what he's going to raise? And then also give whenever you find that, give your predictions too. Like, hey, if he comes out 0.25, short-term bullish, long-term bearish. If he comes out 0.5 or 50 basis points, short-term bearish, long-term. If he comes out 0.75 basis points, give us kind of your prediction, so we can kind of get a taste of what we can expect if, just based off of the numbers that he does come out with.
So I think, so as I mentioned before, the markets were expecting 25 basis points, and then today they've repriced expectations, and now the majority is expecting 50 basis points. So it's still not it's a majority over 50%, but it's still not the whole market. It's like 70-30. So if he does 25 basis points, again, we will have the exact same. We will pump because he's made a mistake, and then we'll dump again when it comes back.
Long term,
made a mistake. So we have the actual decision on the 22nd of March. And the CPI is 14th of March, so fairly soon.
I think we'll be live. We'll be live on Monday. That'll be perfect though. So
that's 14th. That's a week today, I think. Yeah, a week today.
1 week from today.
We've got CPI, and then if that comes in hot, the market will price in 100% chance of 50 basis points, and it will start pricing a potential 75. If that comes in light, the market will probably start pricing in 25. But even if it does, like, not that Jerome Powell would be watching the show, but he needs to shock the market, because otherwise the market is front running him, and also the market is not believing what he says. So you have, for example, the other day, the ECB came out, the European Central Bank, and they said we're going to do 4 more 50 basis point hikes, and so that's another 2%. And bond yields actually fell. So bond yields reflect interest rate decisions. So by bond yields falling after they said that, the market said, we don't believe you. And that means that the credibility of the central bank and the central bankers who are telling the market what they're going to do is being questioned. And the monetary system is all about credibility. If people don't believe that they can control inflation, if people don't believe that the money that they print is worth something, then it will become worthless. And hyperinflation can hit very quickly. Look at Venezuela and Zimbabwe. Like, once it gets out of control, it can go insane. And that's because people rush out of normal currency and into stuff like gold. Gold and silver is one thing that I am bullish on right now, especially gold. Central banks are buying it, like China and India are buying it by the shed load. I actually tweeted a video which was a clip of a podcast that I listen to, which I recommend everybody listening.
What podcast?
It's called Quoth. It's called QTR Fringe Finance. It's like Quoth the Raven, I think is what it stands for. But I don't know if I pinned it. I think I have like something else pinned, but I think I tweeted it a couple of days ago. Yeah, I have something else pinned. Here we are. So yeah, 1 day ago. And I recommend everybody listen to that. It was at 8:05 UK time on the 5th. So sorry, that'd be 2 days ago.
8:05. We'll try to find it.
The bull case is the end of the monetary system. But yeah, it's a.
This is it.
Yeah, it's just a recording. It's like 5 minutes long, but it's why I'm very, very bullish on gold. Highly recommend people to.
That was your piece of advice to me when I went to visit you in London. You're like, hey man, I would probably recommend like actually buying physical silver, physical gold. You know, like that was you're like, that's what I'm doing. Like I'm actually buying physical silver and physical gold to keep.
What date did you come over again? Let's take a look.
September-ish, I think, like maybe, I don't know, maybe just say like September 15th. It was around those days. I don't know exactly. What's up, Prince of Blocks? What's up, Benny Moon? Welcome everybody to the stream, guys. 105 people with us right now, guys. Let's get up to 69 likes. Hit that like button. We're at 56 likes. Let's spread this around with more people.
Take a look at when I recommended you to buy gold.
September 15th-ish. And what is this? The price of gold?
Yeah.
Wow.
Yeah.
Good thing I listened.
So, but you can see, so the reason why gold has gone up is because, like I mentioned, commodities, and in particular gold, is inverse to the dollar. And because Powell's been making tons and tons of policy errors, the dollar has been weakening since it hit Jake and Dome. But since he's been making these errors, everyone's been front running the pivot. And so it's only started dropping again. And you can see the drop today because the dollar is massively strengthening. But it's only started falling again because the dollar started rising. So yeah, back then when I told you to buy gold was at peak like fear of interest rates. Since then, everybody has suddenly thought it's over. Like everyone's done the victory lap and celebrated too early. And that means the dollar weakened and then gold going up and up and up and up and up.
This is when I really started like I always listen to Dom, but like when I really started like, oh my God, this guy's very accurate, because everything we talked about but you know, while we were in London on that rooftop came true. I think we were around a 35, 40K Bitcoin. This was before a lot, like even the FTX thing happened, and you're like, hey, I'm super bearish. And it's easier, like when you look back now, to say like, of course you were, right? But like everyone at that time was bullish. Everybody was like, we were at 35K. Everybody thought we were going back up. Everybody thought the bottom was in. You're like, there will be more black swan events. And this is right before FTX happened. I'm guessing, obviously you didn't know that was exactly what it was, but you knew things were going to happen in the space. And then after that trip, I was like, holy shit, this guy is right. And then every time you come on my show, you've been pretty accurate, like 98, let's just say 90% of the time, which is very, very impressive. And I think that's why we've seen this show really grow. You know, we used to have 30 people in it, 40 people. Now we have over 100 every single show because people really do value this information.
I think, I mean, you can't predict, like, again, a black swan is called a black swan because it doesn't happen often enough that nobody is supposed to expect it. So you can't predict the exact black swan. And this is what always annoys me about being a bear, is that firstly, everyone hates you when you're giving them warnings because nobody wants the party to end, and nobody wants to listen to the guy who's saying that the party is going to end, because the more people listen to that guy, the more people will potentially sell and drop. So everybody hates a bear, which is fine. Like, it's just the way of the market. But when the bears get proved right, and when the black swan comes, you're never right. It's just like, oh, you couldn't have possibly known FTX was going to happen. Otherwise, we would have been on a bull run. So there's always like the bears, even though you can like see when black swans are like rearing their head, And right now, for example, with like the dollar back rallying, like bond yields really high. In fact, there's a black swan index which measures the conditions for a black swan. I think it's at all-time highs right now. But you can tell when black swans are getting close. Like right now is the perfect conditions for something to crush the market. And that is because the Fed is removing liquidity from the market, hiking interest rates. Like every interest rate hiking cycle in history has ended with a financial crisis, some sort of black swan event that makes the Fed pivot. The Fed has never once pivoted without a financial crisis or event causing them to do so. Never in history. And to think this time is different is to go against 100 years of like, you know, finance. It's just people just forget. It's like crazy to think that you can have a few things that have had 100% accuracy, and people still like doubt them. For example, if we look at like so yield curve inversion, right? I'm going to show you this. It's nuts to think. I'm going to get this chart up. 10-year minus 2-year. Here we are. So this is from the Federal Exchange itself. Let's share this tab. Here we are. So this goes back to 2018, but let's go for the max time. Okay, right. So the gray is recessions, right? So you can see recession hit here, recession hit here, recession hit here, here. COVID was the last one. You can see that every single time in history, in the history of this chart, where the yield curve has become inverted, where the 2-year Treasury yields more than the 10-year Treasury, that is an indication and has 100% accuracy of predicting a recession. Like, and everyone is talking about this no landing or soft landing scenario where for some reason, even though all of financial history has shown that yield curve inversions predict recessions, literally, like, I think it's an 8 out of 8 record. Like, it's never been once not happened. This time is different. And again, you've got the yield curve. Another fact is that the Fed has never once pivoted until we are officially in a recession. So again, never in history has the Fed pivoted before recessions hit, and never once in history has a market bottomed before we are officially in a recession. Plus the yield curve inversion. So that's 3 things throughout all of financial history which indicate the bottom isn't in, and people will still be bullish, thinking this time is different when it's never different. It's just like human psychology to ignore all facts and just dream about this scenario which has no basis in reality. In fact, they call it the Goldilocks scenario right now. And I had people commenting on my post saying it's going to be a Goldilocks. Like, do they not realize that the reason it's called Goldilocks is because it's a fairy tale? Like, it's why it's called the Goldilocks scenario, because it doesn't happen. It's a fairy tale. I trust, literally studying history tells you all you need to know about the markets. Just look at what's happened in the past and apply it to the present day, because it's never different. Always the same.
Absolutely. And I have a handyman here. He's I hear him out there, but so we'll wrap up around 10 on time, but I do need to get your take. I do need to get your take on Vitalik Buterin, because it looks like Vitalik Buterin, and first off, whoever Look On Chain is called these shit coins, I would have to disagree. I don't think that Colt is a shit coin. I one time called it a meme coin. Oh God, why do I keep sharing your chart? I one time called it a meme coin, Dom, and I got shit on because it's not a meme coin. It's a DAO. But Vitalik sold his coins. Let's just call it that. He sold 50 billion MOPS, which is only worth 2K. He sold 10 billion Colt, which is worth 58 ETH, 91K, and he sold 500. Oh my goodness, dude. He sold 500 trillion of SHIC worth $600,000. Wow. What's your take on this? Why do you think he's doing this?
What I find most interesting is that this doesn't give the full story. So he sold 50 billion MOPS for 1.25 wrapped Ethereum. He then sold, and that's 100% of the MOPS he had. He then sold 50% of the Colt he had for 58 normal Ethereum, just 50%. And then he moved on and sold. In fact, he sold the SHIC first, then the Colt, then the MOPS. So the SHIC he sold in 3 TXs. He sold his whole bag across 10 minutes, 380 Ethereum for wrapped Ethereum. So then he moved on to Colt, and for some reason, he swapped the token. He didn't swap it for wrapped Ethereum. He swapped it for normal Ethereum, and he only swapped 50% of it. And what's also strange is that he worked out to the decimal point how much to sell and remain having 10 billion. Like, look at those decimal points that he sold.
Yeah.
That's
so he still has 10 billion remaining.
Yeah, and the other ones, the other two. So he sold the full amount of SHIC that he had. He sold it in 3 TXs for wrapped Ethereum. Then he moved on to Colt. He sold 50% of it for normal Ethereum. Then he moved on to the other one and sold it for wrapped Ethereum again. So for some reason, he didn't sell all of his Colt. He worked out to the decimal point how much to sell to remain with 10 billion. And then he also swapped it for Ethereum when the others he swapped for wrapped Ethereum. I mean, is that a
what
coincidence?
Does this tell you?
But like, you still got 10 billion.
What does this tell you?
It's hard to say. Like, it seems too coincidental to be an accident. I mean, he actively swapped 2 for wrapped Ethereum and just Colt for normal Ethereum. And
what does that tell you? I want to. We'll talk about him keeping the Colt and selling half his bag, but I don't understand like the wrapped Ethereum versus regular Ethereum. Like, why would he even do that?
I don't know. But like when you go onto Uniswap or like, you know, CowSwap or like 1inch, you pick like you swap X token for X token. So he would have actively swapped it for wrapped Ethereum, and then he would have actively changed it from wrapped Ethereum for normal Ethereum. So why did he decide to do that? And then why did he decide to then go back to wrapped Ethereum? Again, I have no idea why he would or wouldn't, but he did.
First take here, though. I mean, like he dumped his entire bags of SHIC and MOPS, and he kept 10 billion Colt. Exactly. Like, I'm going to put a tweet out after this. I didn't know that. I thought he dumped all of his Colt. I'm going to put a tweet out right now because, I mean, well, like, this is literally, guys, like, I just logged in. I took the weekend off, so I'm seeing this. Like, that's, to me, pretty bullish. They kept 10 billion Colt worth 100K.
Yeah, I mean, it's hard to say, isn't it? Because, like, I mean, I'm conscious, like, I haven't, like, tweeted about it or, like,
I don't want to tweet about it either because I don't want him to, like, you know, what if he sees it?
This is the thing, like, you don't. As in, like, you don't want to speculate too much because it could be that it's a genuine, like, it just seems weird that he would sell the first one in 3 clips, 100% of the bag for wrapped Ethereum, then move to Colt, only sell 50. My thoughts are that because he's replied to Colt before twice.
Yeah, I've seen it. First
time, when someone said talk about Colt, he said go back to 2021. Obviously a reference to thinking that Colt's a meme coin like SHIB. And then the second time someone said he was playing around with this AI image creator, and someone said, type in Colt DAO Guardian, and he shared an image of what came out. So he has interacted with Colt before, so he knows who they are.
Yes.
My thoughts are that he sold half of it like he was selling the previous one in 3 clips. And then I recognize this name, and checked, and they've just been at Ethereum Denver. Literally, like, they've been at ETH Denver, like, supporting Ethereum. So I think he may have thought, I recognize this one, checked on their thing, seeing like that they're actively supporting Ethereum literally right now. So I think he might have thought, oh shit, actually, I won't sell that. But if he buys it back, that's a big endorsement. And I don't think he'd want to do that. So I think that he sold half, intending to sell all of it like he was with the others. And then halfway looked into what he was selling, and decided basically not to. I mean, that's just speculation.
Yeah.
I mean, he could have just forgot to sell the other half, but it just seems odd that he sold 100% of one for wrapped Ethereum, then sold half of one for normal Ethereum, and then sold the next one again, 100% of it for wrapped Ethereum. It just seems a bit strange.
Yeah, that's why it looks like Mops sent him more. Looks like an hour, 30 minutes ago, the Mops deployer.
Be careful though, because if you click on most of those transactions, there'll be spoofs. So effectively, like somebody sends a transaction and it goes through his address, but it's not actually with his. So a lot of it will be spoofing transactions.
Gotcha. Yeah, I think it's bullish, but like I said, it's like, you know, because I hold Colt. I'm a fan of Colt. I'm a fan of Mr. O. I like what they're doing. They have their blockchain, which we're going to talk about in just a second. But I don't want to tweet about it yet and say like, hey, he only sold half, because I don't want him to be like, yeah, I'm gonna sell, and that's not a good receipt to have. So I'm gonna give it some time.
Yeah, it seems. I mean, it's certainly like odd. I mean, there's enough people talking about the fact that he only sold half now. Like,
oh, there are. Like, is it okay? I might
it's
get a tweet
been
out
flagged, and like, there's people who've mentioned it.
Well, it's important to note, because it's also good exposure for Colt DAO too. Like, especially right, because it's like, hey, they're talking about it. Sure, this look. I might quote tweet this, because it's like, hey, this thing has 500,000 views. Like, it's good that they're talking about it. But it, like, when I first saw it, I thought he dumped all of his Colt. I didn't look into the Etherscan, so it's like, I'm gonna quote tweet it and comment on it too, and be like,
yeah,
hey,
there was a. I think it's already been. I think Mr. O quoted it and actually clarified that it was like that it's a tad misleading, because it's again, like, people will read that and think they've dumped all of it, when in reality,
pretty good.
dumped half of it.
There you go. I'll pull this up for Mr. O. He said,
you look at,
famous last words here, but worth clarifying. There you go. Vitalik sold all of his Colt, or excuse me, sorry. I'm just as bad as Look on Chain. He sold all of his Mops. He sold all of his Schick, 50% of his Colt. With Schick, he sold it all in 3 batches. Colt, 50% were sold to ETH, not wrapped ETH. Okay, cool. So I will tweet about this then, because I wasn't sure. I just didn't want him to like accidentally see my tweet and be like, "Oops, I meant to sell all my Colt," and be the guy that makes him sell.
He still might. I mean, that's why. Yeah, I mean, why he put famous last words, because you're taking that risk, aren't you?
But worth clarifying, yeah.
But yeah, if you look at like Mops, for example, that's up 2,700% today.
No. What is Mops?
It's a meme coin, and it was only like 100 and something market cap.
Okay, people are talking about this. Mops for ETH. Okay, so Svag has just rugged a bunch of coins as a billionaire. He got them airdropped, and now one is getting sent. Look at BitLord. That's funny. This is great. Could happen for Colt.
Well, the thing is, obviously, like, and I admit, like, if you look on the top holders of Mops, you'll see yours truly, who aped a big bag at 160 something K market cap, because I saw that it was at 160K market cap.
Dude, this thing is sending.
And I thought, like, this, like, it's the actual sell amount isn't enough to be a bad thing. Like, it was probably absolutely send.
It was dead, right? Was this a dead token?
Pretty much, yeah.
This is insane, bro. Crypto is so funny. Like, it really is the funniest thing in the world.
But I thought, like, oh, this is probably going to go full send, and it did. I owned 1.75% of the supply when I first aped it, and then laws of meme coins, I sold it after a 2x. But yeah, you can probably still see me there.
Wow, number 32.
Yeah, there we are. So I've reduced my bag.
Dom is a true degen.
But a profitable one. But yeah, I mean, the thing is, I'm always conscious. Like, I am very much like, I will cash in. Once I've got the 2x, I'll take my initial stake out, especially with meme coins and stuff on like this, because it's not like I'm buying it because of TA macro or like anything. I'm buying it because I think that human psychology will have it.
Tends to
Human
work.
psychology will just go for it. So I will cash out my initial stake fairly early, and then I'll let some run.
Tends to work. Wow, that's insane. And like I said, I have the guy, because we have a leak in our roof, so every time it rains, it kind of gets our bathroom floor wet. So he's here. I need to help him out. But I want to talk about this real quick before we wrap up the stream. I want to keep going. I really do, but I have to help this guy out. Let's talk about the Modulus chain. The Modulus chain.
Oh, there's a video.
Yep. Here is the video. Walk us through this and let me know if the microphone kind of cuts off. Sometimes it's messing up. But Modulus chain, this was posted on March 4th, so 3 days ago. The first look at the Modulus chain, a ZK blockchain. First look, it's in beta. Talk to me about this. What are your thoughts on Colt DAO's utility that's coming to life here?
Yeah, it's a fork of Polygon. I think Polygon Hermes. I think that's the name of theirs, or that might be a different one. But it's a fork of the one that Polygon are currently working on, but they're adding additional customizations. You classic like fudders came out of the woodwork, like saying that it's a copy. Like, honestly,
are you surprised though? Are you surprised that some random guy on Twitter said some random things? Like, it's just
no, not true. But I mean, like, it's just I find it as a dev, like seeing it, and I feel for like the devs, like, because people don't realize that like an ERC20 token, right? That is every single token since the ERC20 token has been a fork of a previous token.
Yes,
it's a copy and paste. That is development. Like, people don't realize that every single coin, token, almost everything in existence that you interact with on the blockchain is a fork. It's a copy and paste. And why do you do that? Because if something has been tried and tested, you don't just throw it out the window and think, I'll do something new, because that's how you get absolutely screwed, or you produce a bad product. Look at Solana. Solana, famous for outages.
Yep.
And the reason why is that they're non-EVM. And EVM is Ethereum virtual machine. So any EVM chain is a fork of Ethereum. BSC, FTM, AVAX chain. All of these are just Ethereum, but forked to be made cheaper.
Yeah.
And so that doesn't make them less valuable. Like, they're all worth billions. And that's because you fork and customize. Because why would you not? It's like saying, this has been done, I'm going to throw it out the window and I'm going to do it differently. And that opens yourself up to so many hacks and exploits, because you're basically going with something tried and tested and just throwing out the window. So yeah, it's a fork of Polygon. It's exactly, I mean, they've always said that, but for some reason
it always has been. Yeah, like ever since I heard about it, it was always a fork.
Yeah, so that's, by the looks of it, this is the video of the actual testnet, so hopefully they'll release the link soon. But yeah, I mean, if this is ready, I think the idea, and they've said before, they're waiting for Polygon to launch theirs onto mainnet, which is due on the 24th of March, I believe, for Polygon. Then they're going to let it be stress tested, basically check that they don't get screwed in any way, because if Polygon gets screwed, they know that theirs will probably have the same exploit, unless it was something to do with the functions they change. So yeah, I guess that once Polygon is tested, then they're pretty much ready to go. So maybe by end of Q2.
I love it. By end of Q2, it should be ready. Two more questions. We'll do Scottish Crypto and then Silver Fox Lad. Real quick, just answer this in one sentence. Chicken, like if you're eating chicken wings, do you like, I shouldn't say chicken wings. If you're eating chicken, do you like chicken wings or boneless chicken?
Oh, that is a difficult one. In terms of the meat, I much prefer dark meat. So I am a thigh and leg chicken meat person.
Yeah.
But I would order boneless thighs at Nando's.
Thank you.
So I'm more than I prefer the dark meat, and if I have to have it with a bone because of that, then I'd prefer that over breast. Breast can be dry, and I can't stand dry food. So
thank you. We're on the same page. It's you and I. And Pixel said this earlier, and I wanted to pull it up, and then we'll end with Silver Fox Lad's question, which is, week ahead, bullish or bearish. But Pixel FX said, Jake, I'm interested in VEMP gaming future. Can you ask for a roadmap, Dom? I always like to talk about VEMP, a project I still hold. Give us some updates here with VEMP. What can we expect with VEMP?
So we have we've done a recent pivot, hence the rebranding from VEmpire to VEMP. We're very much pushing towards gaming, and we've acquired multiple other games. So it's a bit of a quiet period for us at the moment, in the fact that we've got so much bullish stuff that we're building and so much coming up that will just be incredible once it's out. But we're in this little period where we're in between, pushing the button on that, pushing it out, and actually delivering it and getting that impact. So we should have our launcher, games launcher, out with multiple games. Again, fingers crossed by the end of Q2. But yeah, it's just about we've got the multiple games. It's just that when you've got 3 games that you're building, and then the launch of itself, what we don't want to put out there is there's no point launching a games launcher with 1 or 2 things on it. We want at least 3 things. So there's a lot of moving parts, basically, of getting the actual games ready for publish on the launcher. So we're hoping to have at least 3 games on there by Q2, and then once we got the 3 games, then we'll push it live.
Scottish is he said, once I make some money, I'm gonna invest in VEMP. I think I need to get another VEMP tweet out today, because I want to get on this on your guys' main page. But yeah, a lot of stuff. The Penguin Cart game looks incredible. We're excited about that. Shout out to Pineapple Steph. She said, have a great day. Jake, Dom, and chat. And final question here, guys, because I want to help the guys sitting in my living room. Finishing weekly discussion. The week ahead of crypto this week, March 6th through on. Bullish or bearish? I think I can already answer it just based off of the liquidation chart you showed, your tweet about 21.5K, but let's hear from the man himself. This week ahead, Dom, bullish or bearish? Where could you expect Bitcoin and crypto going?
Yeah, I'm wondering, I want to take a look at the 12-hour chart of liquidations. On the weekly, there's a lot of liquidations at 21.5. So that's where I am looking at short term, but a week is a long time. It could hit 21.5 today, and then I could potentially be bullish depending on the data. But short term, max pain is down to 21.5K. Here we are. I'm just running it now. It's in the middle of nowhere. On the 12-hour, there's a few more stops on the upside compared to the downside. But yeah, I'm overall bearish. A week is a long time in crypto. I think that we could get to 21.5 fairly quickly. Could even be today, tomorrow. From there, by the looks of the chart, again, it will depend, but we could bounce from there a bit higher. I'm still a seller of rallies, basically. If Bitcoin rallies, I will add shorts. And if it hits a level like 21.5, I'll put a hedging long bet on. So, for example, right now I am long Solana as my hedge, and I had limits to buy that at the lower levels of where I was taking profits. So where I have my limits to take profit on Bitcoin and ETH shorts, I have limits to buy Solana there as a hedge, and then I'll take profit on that when I add shorts back. So I trade with a short bias, which means that I do still go long, and I say to everyone that you shouldn't only trade one direction because it doesn't move in one direction. But I trade with a short bias, which means that I am always looking to sell into rallies, but I will buy dips, but I will always be conscious that the overall direction I'm thinking is down.
I think this might be B-Roots, Crypto King, Crypto Tyson Fury. It has to be, because only B-Roots would come up with that humor. The Crypto Tyson Fury is going to get right.
Make a difference than him getting it all the time, to be honest. He's been saying 30K from 25K all the way down to 22K where we are now. So
I love it. You guys are so opposite. It's only one of you guys are going to be right. You're both so confident.
Thing is, we actually message. Funny, I've seen that he's messaged me on thing, because again, I still, even though on the surface we're always arguing about the direction, we send each other tips. When I saw that MOPS one low cap, I thought it'd be rude straight away.
He loves it. He was already in. I bet he was already in.
He loves a narrative. In fact, no, he messaged me back because I messaged it to him at like 320k, and he messaged me back when it was 1 million. And he said, "Oh, I just saw this. It's annoying." But
yeah, we're just waking up over here in this.
We chat. Actually, we are on good terms. Usually, it's just whenever we're talking on Twitter, we're arguing.
Yeah, of course, he's a cool guy.
Like you two.
Yeah, well, ours was agreed upon, but he's a cool guy. But it's like, yeah, once you're on Twitter, you got it. Like, he's very, very bullish. You're very, very bearish, right? And when it comes to being friends, like, he's one of the coolest guys you ever meet. Name another guy that goes to a nightclub, takes off his shoes, and is dancing and shuffling in his socks at a nightclub in Miami. Not many people. Only B Roots.
Not me.
He's the man. But guys, that's the show. Dom, honestly, thank you so much for coming on. This was probably my favorite one yet. Like, just good flow, good conversation, good knowledge, and the show is growing very, very well. Like this, we had over 100 people the entire show, and I know I get a lot of DMs about this show, Macro Mondays, and how people get a lot of value from it as well. So thank you for coming on. Happy to have you back from the honeymoon. Hopefully you don't have too many wives and go on more. And we'll be back next Monday. Thanks for being flexible as well, calling it Macro Tuesdays. Sometimes the weekends get the best of us partying, traveling, stuff like that.
I'll blame Rodney.
Yep. Yeah, please. You could definitely blame Rodney for that. But yeah, we appreciate you guys, everybody in the chat. We appreciate you, Miles Journey. I thought you were going to take a nap. He stayed up the entire time. Believes everybody. We appreciate you guys. We'll be back next Monday. I'm going to get some tweets out about Colt DAO and that sale. And we will chat with you guys soon. I'll be back tomorrow at 9 a.m. PST. Hopefully everybody has a great day. Dom, we appreciate you. Thanks so much, everybody. See you soon.
Goodbye.